Hey guys, in this video, I'm going to go over how much my REIT income portfolio has made over the last 3 months. So without further ado, let's get into the video. And just real quick guys, I'm using brand new video software, so I apologize if I screw up, where my head is in this video. So with that out of the way, let's get into the video. Okay, so as you guys know, I do this every time. This is a live website. This isn't a screenshot. I'm actually in my actual portfolio. All right, so we're going to start with kind of a total overview of the portfolio. Currently, the entire portfolio sits at $227,000. All right, and I have made $14,545 in dividends, and that's not just for this year. That's across all the years that I've been investing with M1 Finance. I have a market gain of $12,781. A money weighted rate of return of 19.76%. All right, so let's talk about this REIT portfolio and how much it's made in the last 3 months, and then I'm going to give you guys some of my insights and kind of my thoughts about this whole thing, right? Because it is kind of crazy. So let's look at 3 months. In the last 3 months, this portfolio has gained $31,561. That is crazy. All right, that's almost $10,000 a month, and that's with $2,000 or $2,200 worth of dividends, with a market gain of $29,000. All right, but how did we actually get here? Right? Where did this $1,000 come from a market gain over the last 3 months, right? I think that's what is going to be more important for this video to share, because there's a couple lessons in here, and a couple of those lessons up front is, you got to be patient. You have to have a long-term, investment mindset, and, you can't be emotional. You definitely can't be emotional. Because if you've seen some of my earlier videos regarding this portfolio, it's been down in the red for quite some time. As a matter of fact, if we look at the holdings for almost 2 years now, 2.5 years, this portfolio was red. This portfolio was really red. I have a cost basis of $207,000, but my portfolio sat between the $199,000 range to as low as $173,000 range. Right? It's dropped quite a bit. And only recently, in the last couple of months, has it started trending up. And that's because of what I'm about to talk about. So this really started back in July, July 9th and 10th. July 9th, if memory serves me correctly, Jerome Powell, who's the chairman for the Federal Reserve, went to Congress to basically talk about, the economy, the interest rate, and what the Fed is doing, right? Because as you guys know, Congress works for the American people, and the American people have been stuck with a very challenging economy. We're talking about rising food costs, rising energy costs, rising transportation, rising housing costs. Everything is just so much more expensive now in the United States, which is why I kind of love living out here in Thailand. But anyways, with that being said, that was a highly televised media event for Jerome Powell. And I'm not here to say he's a bad guy or a good guy or anything. He's very impartial. You have to be, especially in that seat. So they spent basically, I think it's like a couple of hours just grilling him and, asking him questions. They're bringing up kind of just a little bit of everything, right? The next day, as you can see, July 9th, there really wasn't a massive bump in the portfolio because he wasn't really saying anything that was spectacular. He was just answering a lot of questions that Congress had. But it was the July 10th meeting that he had, which is, the kind of the original meeting that he has every other month, where he talks about the Federal Reserve's intent, right? What they're seeing and what they intend to do with the federal funds rate, which is the interest rate. So July 10th, there was a report that came out that, inflation was cooling. It was cooling down to about the 2% level. And, Then Jerome Powell had his, televised media event, which wasn't all that spectacular compared to the one with Congress. But he basically said, the Federal Reserve's, dual mandate is to keep unemployment low. The numbers look great, and to keep price stability, which is starting to trend in the right direction, right? Throughout that whole meeting, he basically was just saying that, it's trending in the right direction. He's seeing good positive numbers. And this sparked a huge rally in the REIT market, a huge rally in the REIT market. As a matter of fact, the same time, real estate, whether it's REITs, private real estate or whatever, real estate in general had a huge uproar. It was crazy. Like everyone was saying that, hey, because of this, there's going to be rate cuts soon. And Jerome Powell did not mention in that meeting whether there would or wouldn't be rate cuts. He said he'd be looking at the data. Now, of course, there was so much speculation that and rumors that there was going to be rate cuts in September for sure, right? And here we are in September, and the portfolio has just been going up. It's just been trending up, which is crazy, right? And it's expected that he will be cutting rates this month, right? It's just how much, right? That's what we're waiting on. We're waiting on whether he's going to cut it 25 basis points, 25 basis points, or if he's going to cut it 50 basis points or 100 basis points, right? 100 basis points is probably more out of reach. Would be nice, but very doubtful he'll do it. It's going to teeter on 25 or 50, right? What I suspect will happen, he's probably going to go with a low 25% basis point cut, and this portfolio is going to rally. Regardless of how much he cuts it by or how much the Federal Reserve cuts it by, this portfolio, real estate in general, is going to rally pretty hard. So I'm pretty excited about that. So that is how this portfolio got to where it is today, right? It's because of the rumors and the speculation that the Federal Reserve is going to be dropping interest rates because the economy is looking good, right? The numbers are looking good. Unemployment, well, maybe unemployment at this time is starting to rise, which is a little unfortunate, but the overall numbers, inflation numbers, CPI is starting to go or trend in the right direction, right? So, what does all of this really mean? And so, with that and all the news and kind of how it got to here today out of the way, let's take a look a little deeper in the portfolio. All right. And maybe in one video, I'll do, a real deep dive of the portfolio, but I'm going to give you guys kind of just a high level because I want to keep this video, short and keep you guys, respect your guys' time. So this is what I'm invested in. All right. I have cell towers, industrial REITs, apartment REITs, storage REITs, triple net lease, manufactured housing, strip center REITs, biotech labs, casino, single family, and cannabis REITs. And actually, cannabis REITs have been my best performer this entire time, which is funny because it's also been my highest risk play, right? So I'm actually kind of surprised about that. Biotech has a little bit more of a recovery to go. So I've been trying to buy as much of them as possible, much as a REIT as possible, right? Let's take a look. So I invest in Alexandria Real Estate. It's a solid biotech lab company. A lot of people will mix them in with office REITs because that's kind of similar, type of property they have is kind of office, but they lease lab space, right? You can't work from home, trying to do lab work, in your living room. You need a lab space for that. So Alexandria Real Estate has a little bit ways to go. As you guys can see, I've been dollar cost averaging where I can. That's where all these little spikes are. So yeah, Alexandria Real Estate, solid REIT, has a little bit more to go before it recovers. But really, I want to show you guys something that, or kind of the patience piece, right? Cell towers, they were beaten down horribly these last couple of years, right? And I'll show you an example. But AMT, I invest in AMT American Tower and I invest in Crown Castle Inc. And Crown Castle CCI has a little bit more of a recovery to go, but it looks like AMT is recovered. I've been buying shares of CCI when it was down as much as 40%. Same thing with AMT, down as much as 35%. And I was trying to buy as much as I can. If I could show you how bad it was, if we look here, and if we look at AMT, what is that? AMT stock. All right, if we look at AMT stock, and if we look at the 5-year, like it was down pretty bad, right? In September, here, if we look zoom out a little bit more, we had the peak in 22, right? At the beginning of 22, and then, it just started going down and down. It's just been going down like crazy. And I've just been buying as much as I could all the way down. So now it looks like it's starting to recover. So we'll see if it recovers, It looks like everything is starting to trend in the right direction. So, again, it's all about patience. It's all about having that long-term mindset and not risking way too much, right? Not investing in very risky assets, because all of my picks, they all have very low payout ratios. Typically, they're about under 70%. Not all of them, but typically most of them are under 70% for payout ratios. Most of the REITs I'm invested into, they also have pretty good balance sheets. All right, these are companies, or these are REITs that are, they're not taking on excessive amounts of debt. All right, there are REITs out there that are over leveraged, like 60-70%, right? And it's reflecting in their poor, share price, because if they took on variable rate debt, and the cost of their debt has started to go up, that means it's killing their cash flow, right? If they're making any money, they have to pay off this debt, right? So a lot of REITs got crushed over the last 2 and 3 years. But anyways, back to this, cell towers, industrial REITs. A very popular industrial REIT that I'm invested into is Prologis. And here you can see Prologis had a huge dip, massive dip, back in April. And I wish I had money. I was scrounging around looking under tables and couches and looking in my backpack for money and checking my dryer, to see if there maybe some coins fell out. But I ended up buying some Prologis during this time because, Prologis is a premium company, is a great REIT. They do, warehouses throughout America, and they've never had a drop like this. So I wanted to take as much advantage of it as possible. So along with that, let's go back here. So how did this portfolio actually compare against an index? All right, so for those of you who don't know what indexes are, you have something like the S&P 500 index, right? That might have come up in some other people's videos, right? That's the most popular one, is the S&P 500 index, right? It's just a market cap weighted index of 500 companies, all large cap based in the United States, right? You also have something like the Nasdaq 100, that is basically 100 of the largest cap technology companies in the United States. For real estate, most people will use VNQ, which is Vanguard's Real Estate Index Fund, right? And VNQ is a index, or it's a real estate ETF that holds both mortgage REITs and equity REITs. These are all equity REITs. I don't really hold any mortgage REITs. As a matter of fact, I don't hold any mortgage REITs anymore because they are a little higher risk, and I didn't want to see my capital basically deteriorate in front of my face. So I sold all my mortgage REITs a long time ago. But let's see how it's done year to date. All right. So I'm going to pull up VNQ here in a second. So here's VNQ. And let's take, as you guys can see, this is a live website. Again, this is not a screenshot. If we look at year to date, VNQ is up 6.69%, right? Whereas my REIT portfolio, I might have to go back here. my REIT portfolio is up 11.28%. So this REIT portfolio is actually outperforming an index fund, which is, a little bit of bragging rights there. But who knows how this will perform long term. But the reason why VNQ is lagging behind is because they also invest in mortgage REITs, right? If we look at mortgage REITs, and if you don't know what a mortgage REIT is, that's fine. A mortgage REIT is a company that basically does loans for individuals or companies or even REITs, right? They do the loan processing, right? So if we look at and this is a very popular mortgage ETF, right? It's called MORT. It's the Van Eck Mortgage REIT Income ETF, right? And this it has a huge high dividend, but when you zoom out, it looks like it's just been trending downwards, right? So I believe that this is the reason why VNQ has kind of underperformed me, and it's because of the mortgage REITs that it holds. Because if you look, even year to date, this thing's only been up less than under 0.5%, whereas I'm up 11%, and VNQ is up 6 point something, 6.68%. So I think the reason why VNQ is underperforming is because of mortgage REITs. Mortgage REITs, they're attractive because of the dividend yield. But when you start looking, or when you invest in mortgage REITs and you have what's known as capital erosion, then what's the point of holding it if your initial capital is going to basically erode in front of your face, right? Meaning go down. So, anyways, I invested out of that, I sold out of all the mortgage REITs that I had. If you guys want further proof of this long-term mindset that I'm talking about, and being able to weather the storms, again, my height was 199,000 and I saw it go down as far as 173,000. It's just been going down, and as much as I could, I just kept buying, kept dollar cost averaging where I could to bring the cost basis of the portfolio down. All right. So yeah, that's it. That's going to be it for this video, guys. Just wanted to show you guys that and give you kind of some insights about it and about REITs. I like this way of investing, or at least getting exposure to real estate, but it's not the only way I do it. I also invest into rental properties, into real estate syndications, and I, of course, invest in the general stock market, something as simple as like an S&P 500 index. So quick shout out for my Skool community. If you guys are interested in joining it, it is completely free. All right, there is a investing masterclass in there that'll help you set your financial goals, understand what investing is, help you build a diversified portfolio of stocks, ETFs, and things like that. And then, of course, you'll go out and buy all that stuff, right? Because you got to take action. So if something like that is interesting to you, I have a link down below in the description for you to check out. So we are growing right now. We're at 19 members, and I would love to get to 50 members so I could start doing webinars and start doing calls through the community. So if that interests you, link down below in the description. All right, so that'll do it for me for this video. I hope this video is educational for you guys. I hope you enjoyed it. I'll see you guys in the next video.